Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's discuss what has happened today and what we can expect moving forward for the rest of the month, the rest of the week, etc. And yeah, if you enjoyed the video, please don't forget to hit that like button as it does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below where I share my intraday thoughts and updates on Tesla chart and the stock really as it's moving throughout the day, giving you updated technical analysis live throughout the trading day. So if you're interested, the link is below in the description, $3 a month. But jumping into a Tesla closing the day down about 1.5%, closing at just above $235 per share. Which compared to the market, at least QQQ, you can argue it's a very slight outperformance, not a massive outperformance, but an ever so slight outperformance, right? With the QQQ being down just over 1%. So not too shabby, but today is kind of an important day, but also kind of a boring day. So there are still a few pretty important things to discuss. So let's start it and let's just jump into it. We'll be mainly looking at the daily today. There's not too much happening on the other time frames, at least as of right now, that we haven't already talked about. That's new, but the daily is interesting. So there's a few things, right? First and foremost, a bit of a rough day to start, right? This morning we were having a bit of a sell-off, and then we came all the way down to as low as 233.5 roughly, right? Now, the important thing is the fact that we held my first like real true important zone, which is essentially going to be around 234 roughly, right? And the reason that's important is because that's where the yellow and the orange line are. What are the yellow and orange line? Well, the 21 EMA and the 50-day moving average respectively. We held both of them, we closed above both of them, and we went below them, but we didn't hold nor close below them. That's the important part, right? So that's going to be good. We're holding at that general level. I'll give you a kind of a super rough idea as to what I'm looking for to the downside or upside, really just the important levels that I'd want to see held, broken, etc. Very, very soon right after this little topic here. And on top of that, we also came up exactly to my resistance level, which is pretty much just entering 240s up to about 242, right? That's gonna be the first like real level to breach, if you will. That's what I've been telling my members pretty much as it was happening. So that's kind of the little, I guess, if you will, limbo land that we're kind of stuck in for now, right? You'd want to see a break above or below one of these to really get an idea as to where the next move and the next direction will go. But with that being said, there's still more work to be done on both sides. So let me explain. So let's talk about the downside first, right? Like I said, the first level that I ideally I do want to hold. Like this will be a level that a better way to put it is this: where we stand as of right now, I'm net bullish. I'm about 70%, maybe 75% bullish, and then about 30-ish% bearish. Where we are right now, as long as we hold above that 21 EMA, and I guess the 50-day moving average is there as well. So as long as we hold above both of those, I'm at around that percentages. Now, if we fall below that, if we fall below 234, and more importantly, we close and hold below 234, right? That's the most important part, right? Not just go below, but close and hold below both of those, right? 234 roughly, which is where those two moving averages are roughly. I'm still bullish. I am still bullish, but the percentage goes from 70% bullish to 30% bearish roughly, right? Give or take, to about maybe 60% bullish, right? It's still bullish, still definitely bullish, but definitely less bullish, right? Absolutely less bullish. And the reason for that is quite simple. We lost the 21 EMA and the 50-day moving average, but especially the 21 EMA, I ideally do not want to lose that because that makes things a little bit less, a little bit more suspicious, I guess you can say. Now, the reason I'm still bullish, however, is because, even if we lose 234 and that 21 EMA, we're still inside this channel. We're inside this blue channel. You can see right here, these two blue lines going up and to the right. We're still in that channel, right? And this channel will hold us, and the bottom of this channel will coincide somewhere around about, give or take, $230 per share, which also is just that very important resistance level, or I guess, well, resistance and support, in this case, support level, right? That we held many, many times with a lot of wicks over here, even one that went well below that ended up actually beautifully bouncing right off the 21 EMA as well, and ended up recovering and closing back above 230, which is why I always say it's important not just to break below, but close and hold, right? This obviously didn't, and that was a bear trap. So that's going to be another important thing to understand, right? But if we do break below 230, fall out of this channel, we lose the 230 support, then I start flipping bearish. Then I'm more bearish than bullish. In fact, I'm probably decently more bearish. I start turning about 70% bearish if we close and especially hold below 230. That to me is probably the most important level. The 21 EMA, 234 is important, but the most important, like the level I really don't want to lose, the level that literally will probably turn me bearish is going to be 230. So that's the way I look at it to the downside. To the upside, pretty simple too. First and foremost, 240, 242. I want to break that, right? Of course, we have the volume profile that increases as we enter this territory. So, pretty much right as we enter 240s, and especially once we enter 250s, right? First level for the bulls, you want to break above 240, 242, that general level. You want to break above that. Following that, we have the 100-day moving average sitting at about $250 or $245. You want to break above that. And the main level to break, pretty much the equivalent of 230 for the bears to break. For the bulls, at least in my opinion, pretty much very low 250s. Like I don't have the exact number, but very low 250s. Like just simplicity's sake, we'll just say 250 for now, right? And that's obviously because that's where the top of the bull flag is. And you can see we've gotten rejected many, many times, right? Ever since it started all the way back here. Then we got rejected over here. We got rejected over here. We just got rejected over here just about 4 trading days or so ago, right? It's an important level to break. It's an important bull flag, but again, it's a bull flag. Doesn't mean it has to play out like a bull flag, but more often than not, it does. You want to break above and out to the north side, ideally, of course, of this bull flag. That's going to be the main thing I'll be looking at as well. So those are the kind of the main stepping stones, that I'd be looking at. But again, by far the most important level for the bears to break and the bulls to defend, about 230. If we lose 230, I think we'll come down to, at the very least, minimum the 200-day moving average, which is 224, which isn't much of a draw, but honestly, which can potentially set up a bear trap. Is just that's where the probability really just, I'm not liking the probability. Like I wouldn't bet on it. Like it can happen, but it's not something I would bet on happening, right? You know what I mean? If that makes sense. And on top of that, if we do lose it, I do think we'll come down to somewhere around about like 215ish, give or take. And if we lose that, then low 200s. And if we lose that, well, that's going to be not good. Then we go back to the 180s, right? But the most important level for now, at least for me, 230 for the bulls to break. The bears to break, the bulls to defend, and the bulls to break and the bears to defend is going to be about 250. So 250, 230, probably the most important levels. But even if we start closing candles above 240, it's starting to look good. Or at least 242, 240 to 242. Another reason why I'd really want to see the bulls break above 240 to 242 on top of the reasons that I just mentioned, typical resistance level, et cetera, is potentially setting up a bearish head and shoulders here, right? Potentially. So, it's still some work to be done to really set it up, but there is potential for a bearish head and shoulders that'll look something like this. My goodness me, let me go ahead and remove the 100-day moving average. Let me even remove the 50-day moving average just for now, just for simplicity's sake, right? Where is it? So we'll have a bit of a potential head and shoulders. So that's going to be the left shoulder. Obviously up here is the head. And potentially now we're setting up the right shoulder right here. So, in order for this head and shoulders, bearish head and shoulders pattern to essentially get nullified, I'd want to see at least a break above 242 and hold. That to me will get into the territory of, this head and shoulders pattern, bearish head and shoulders pattern is probably getting nullified. It's no longer a thing. It's no longer a threat to the bulls. And that's great as a bull myself. So that's going to be something I'll be watching as well very, very closely. Now, the final thing I really want to mention on the daily chart, which again, I said, we're pretty much looking only at the daily chart because the other time frames, nothing really new in my opinion to update just yet. But another important thing to understand on the daily chart is we are setting up what looks to be, it's not one of my favorite things in the entire world. Maybe I've never been looking at it enough, so I've never really in my head just really understood or weighed the odds of its success versus not success, failure, whatever. But we are potentially setting up a hidden bullish divergence now. A hidden bullish divergence, it's called hidden for a reason. It's a bit harder to spot, right? It's not something that's just easy to look at and just see right away. It's a bit harder to spot. But what a hidden bullish divergence is, in this case, you can see for this example, is essentially the stock is making a higher low, but in this case, let's say the RSI, for instance, is making a lower low. That's a hidden bullish divergence. And that's exactly what's happening, right? If I go all the way over here, you can see, I can even draw it out, right? We have, of course, something like this. This blue line right here. Maybe I can even change the colors just so it's a bit easier to understand, I guess. But let's make it, I don't know, green, I guess. I don't know, whatever. Right? This green line right here, right? This line right here is the higher low, right? Which is exactly what this is, higher low. And then what's the RSI doing? Lower highs and lower lows, right? So in this case, you can see it's pretty much doing the exact same thing. This is going like this, and this is going like this. Same thing that's here. This is a typo. I feel like this should say lower low. I'm not really sure. But regardless, it's doing this. Right, if we go over here, right? So pretty much if we take it from this exact point, so you can see we are technically now making a lower low, right? Oops. Right? Which is exactly what that image is boom. It's showing, right? Pretty much the exact same scenario, right? Again, it's not my favorite thing in the entire world. It's not something I usually look out for too much, and it's not something I personally put too much weight in, but we did have a hidden bullish divergence that happened on the 65-minute chart somewhere before. I can't remember exactly where. I think it was right here, actually. Yeah, it was this right here. Same concept, right? If we go back a few days, same idea, right? We were making essentially higher lows, while here you can see same idea, we were making lower lows, right? Exact same thing happened. Boom, boom. And then what happened? Well, we had a beautiful rally all the way up to 250. The exact same thing happened really not even that long ago, pretty much just before this rally up to about 250. Exact same thing happened here. And look how it played out. Same thing's happening on the daily. So we'll see how it plays out. That's why I'm also more bullish than bearish. But those are the main things I'm looking at right now. Those are the main things I am personally paying attention to. So yeah, take it for what it's worth. Again, could be completely wrong. I could be an idiot. I could have absolutely no idea what I'm talking about. Obviously, the stock market will always find a way to make things as complicated and annoying as possible. That's just how it works, and that's just what it does, and that's what it's extremely fucking good at, right? So, all that being said, thank you for watching. If you enjoyed the video, don't forget to hit that like button, and as per usual, I will see you tomorrow. Peace.